always been in a financial guy in financial services, so I made my money in hedge funds, in venture capital, fintech, recently in cryptos and blockchain. So this is a completely different world, and I spend the money partially through that foundation, charitable way, etc. So this is grant money. So this is pure philanthropy, and the crossover between these two worlds is the impact investment world.
So venture philanthropy is very different from both traditional philanthropy and traditional investment. Venture philanthropy is a high engagement and long-term approach in order to support NGOs, social purpose organizations and social enterprises that are willing to create and bring new and innovative solutions to pressing social issues. Venture philanthropy comes with both financial and non-financial support, and it puts a clear focus on impact measurement and management. So investors that adopt the venture philanthropy approach are called investors for impact. The venture philanthropy, and what do these investors for impact provide? So first of all, they provide investment, either in form of grants, debt, equity, or other form of hybrid financial instruments that are matched with the needs of the social enterprises, the underlying social enterprises. On top of that, alongside the financial support, they provide a wide range of non-financial services which are aimed at strengthening the capacity of the social enterprise to deliver its social impact. For example, by supporting them with the developing of their business model, or in professionalizing their team, or providing marketing and legal advice. On top of that, Investors for Impact are committed in measuring their impact of their activities and also to manage the data collected in order to maximize the social impact and minimize the negative one. So traditional philanthropy, on the other hand, is quite different because it is usually related to grant-making activities with a short-term time horizon.
How social and how financial should it be? It's the old question, and I don't think it's always mutually exclusive. So you can really get both, and in a lot of cases, and we need that if we really want to scale. If you want to fight poverty, you need much bigger scale, and you have to attract the big money, institutional money from pension funds, insurance companies, etc. And they will only come in if you get the same profitability as with normal investments. So if we can, in this impact investment world, which is still young, especially in emerging markets, if we can demonstrate and build track records that demonstrate and prove people that it's possible to invest with same return risk expectations and outcomes as with traditional emerging markets investments, then we will attract the big money, and that's when the impact will really happen. If billions come in from pension funds, insurance companies in some of these projects, what we see right now with renewable energy, globally, it's really starting to have an impact. Or also on the ESG side. Again, because impact investments is a big field. You talk about developed countries or emerging markets and which sectors, etc. It's not an easy answer, but I'm in big favor because I have these two sides in myself. Sort of let's say the really let's call it capitalist or financial world, sort of cryptos and VC and hedge funds and whatnot, and the philanthropic world, which is also needed. Like in girl empowerment, it's very difficult to build business models that are economic and where you can earn money or make investments, because it's a very specific sector. So it's mostly built through grants, I guess. But in between, there's other sectors like renewable energy, sustainable agriculture, financial inclusion, etc., where you can really build great investment portfolios that make real money and at the same time have a huge impact, and that you can scale up. And with that, you will actually then end up changing the world.
I would say in many cases it's not only possible, but a constant challenge, for founders to not to lose sight of their impact. Even in cases where there is a high degree of lockstep between, financial value creation and impact creation, there are many choices that founders face, where they can decide in favor of one or the other. So, in general, my impression is that the change, the positive change that you want to measure and that is being created doesn't depend on the organizational structure of the change-making organization. It's in both cases, both set of tools apply, and actually I would say there is a potential for cross-fertilization. So the methods that non-profit organizations apply and have developed, impact investors and social entrepreneurs can learn from them, and vice versa, right? So there's frameworks and methods and tools that impact investors have developed that NGOs can profit from as well.
Some people feel that there is an inherent conflict between the pursuit of financial return and the generation of social and environmental value. But I think of it more as a question of, right opportunity, wrong capital. And I think part of the challenge is that asset owners, investors need to have clarity about the purpose of their capital, how they understand the impact profile that they seek to create. And entrepreneurs need to understand what is it that an investor is really looking for, how do they understand and define performance. And it's at that intersection where these two can come together in a very powerful way, or not. And if there's not clarity on what I've called the purpose of capital, then in fact you can have serious problems and conflicts. And the trick here for me is that I think of this as total portfolio. I think of this as an asset owner. We should consider the fact that we have philanthropic, near market, and market rate capital to deploy, and across that continuum, there's a different risk, return, and impact profile that we can define within these different asset classes, strategies, and investment instruments. And so, to my mind, there is no conflict between the pursuit of different levels of financial return and various types of impact. What is the challenge is people often haven't really defined for themselves what is the purpose of their capital, how do they understand the returns that they're really trying to generate. And so in my last book called The Purpose of Capital, which is a free ebook, by the way, you can get on the website, I explore the social framing and development and aspects of our understanding of capital's function and place in our world, because that, to me, is really the starting place. With that in place, we then can look at what are the different tools and techniques and strategies then that best capture the value that we're trying to create.